Hello everyone, I hope you guys are having a wonderful day and I hope you guys had a wonderful weekend as well. And as you guys can probably tell, the futures are open and let's just dive into some analysis. This is going to be the weekly recap for the week of September 18, and I'm going to be doing a little bit of a forecast for the analysis or the week that's coming, and some analysis about the S&P 500, the Dow Jones, the Nasdaq, and the Russell, and we'll go over maybe the DXY, gold, natural gas, and oil if we have some time at the end, but it should be a problem. I don't mind stretching these videos out, and everyone seems to enjoy them. But anyways, let's just dive into it. So this week, you guys can probably tell on the SPY, we had a pretty nasty week. Lots of selling happening, and especially on the daily time frame. So I've been talking about high volume selling, and we have been getting high volume selling, right? I'm talking 90 to like 110 million shares per daily candle, and you guys could probably tell on the last candle of the week we got 100.8 million shares on the S&P 500. The day before it was 104 million. The day before that was 82 million. So still pretty decent volume. And then we actually had another 111 million shares traded on the S&P 500 on this big down day right here. So right now the futures are open. So let's just take a look at what we're seeing on the new weekly candle here. We'll cover the monthly and the daily as well. So let's just take a look at the S&P 500 weekly candle. So we just printed a new weekly candle. Right now we have an 18 and a -5 and a red cross. So indeed looking very, very, very bearish for the markets. Again, we still have green money flow, but if we cut over to the smaller time frames, it is indeed looking pretty grim as we are about to cross the red into the red money flow. We're almost at the zero line here. And then if we take a look at maybe some other charts, this is the ONDA chart that trades. It's almost like the futures, but it opens a little bit earlier. You guys can see this one. We have already crossed into the red money flow. So again, it's looking like looking pretty nasty here. So right now we still have a 13 and a -3 on the S&P 500 May futures. Looking at the 4-hour time frame, we are already in that red money flow, and it looks like we are going to extend down into a C wave. But please note that it doesn't, we don't have to stop here, or even, we might not even reach here, right? Maybe we'll bounce off at the 4350 area. But if we get lower here and we start to break down to 4200, it's very possible that we could keep going and even go as low as like 4180 to 4200. So we're setting up for some pretty nasty weeks and months ahead if this does keep going. But the bulls, we'll see if they're going to try to defend this as a double bottom and then to a W to new all-time highs. Right now we're hearing a lot of bond buying, right? So because the yields have gone up, the TLT has gone down significantly, and I don't know. I'm just hearing too many people, buy the bonds, buy the TLT. Now it's time to buy bond. It's so cheap. They're going to cut rates. But we'll see, because the TLT has just made new lows, and it's coming down from a very steep downtrend. If you guys haven't noticed, it's very, very nasty. So it's possible that the TLT could, keep making new lows. If it takes out this low on the RSI 18, then you no longer have bullish divergence. For the time being, you have bullish divergence on the weekly, but overall, it's not looking too good, for the time being. But unless we get a big bounce next week, and there's talks of rate pause, rate cuts, then that'll be very bullish for the markets. You'll see everyone buying stocks like it's nobody's business, and it'll go up to new all-time highs. All right, but for the time being, right now, chart looks bearish. Looking at the Nasdaq, we'll take a look at the weekly time frame. We just printed a new weekly candle, a 16 and a -5. Very bearish dual band strength index numbers. We'll take a look at the Russell. So the Russell is actually not looking as bad in terms of the dual band strength index, but we have cut into the red money flow on the weekly time frame. And if we shift over to the daily, we're already in that red money flow as well. It looks like we may start to bottom out soon as we run into some pretty decent support. So if we take a look at the IWM, you guys will probably see that we have broken down from this upsloping trend line here. And again, it's up to you where you want to place it. You could place it higher, you could place it lower. Some people like to put it up here, right? Because you do have some touch points here, right? And a touch point there, but you have all this chop in the middle. I like to place it right here, where we do have some wicks, right? Let me just adjust that a little bit better. I think I'll just put it back to where it was. There we go. And then now you have a pretty much of you have a pretty clear breakdown at the moment. And then if you were forming bearish divergence on the daily, that's just been invalidated. You have gone lower, but you are going to run into some big support around 168, and then you have the lows at 162, which are going to be major support as well. And you may even get a bounce right around 172, 171. You know, given how much trading's been going on here, I would expect this level to be some sort of short-term support for the Russell 2000. But again, we'll see if we cut through like butter and there's a big massive sell-off, then everything's going to keep going down. But overall, those are your support levels for the Russell. Let's just take a look at the Dow Jones on the weekly time frame here. So the Dow Jones showing some signs of weakness as well. Dual band strength index 18 and a -5, and a red cross on the market cipher. And if we take a look at the daily time frame here, we actually cut into the red money flow already. It looks like we're playing out into a little bit of an ABC correction. So again, you got some downside targets at 33,600 to 32,500. Okay, so that's the Russell. That's the Dow Jones on the weekly and the daily. But if we cover the monthly time frame, it looks like this significantly bigger pattern may be starting to play out, or we have a smaller momentum wave and a red dot on the monthly time frame, and it's going to cause us to go to new lows. But there's also that weekly time, the monthly time frame for the S&P 500 and the Nasdaq, projecting for us to go to new all-time highs and new nominal highs at 17,400, and right here at the as the S&P is expected to go to 6,000, right? But that's on the monthly time frame. A lot of things can happen within then. Maybe another bank fails and we start to go down. Liquidity gets withdrawn from the market. We have a liquidity crisis, and obviously all of this is all these upside targets are not going to play out. And if we look at the Russell 2000 on that monthly time frame, actually I have to get a little bit of a better chart here. So the Russell's, there we go. The Russell 2000, the IWM, it looks like it's projecting also an ABC correction, and we are going to head to new lows here. We're going to take out the pivot lows in the months that are coming. And the Russell 2000, to be honest, looks probably like the worst one out of every single one, especially given the high interest rate environment. I'm not surprised. You're seeing a huge amount of reduction in the green money flow, and you're actually about to cross it for the first time ever into red money flow on the IWM. If we maybe take a look at the Russell 2000, there's maybe been a couple periods here where we've crossed into red money flow for a brief moment, but this was probably like the 2000, the 02 bubble, or the tech bubble. There you go. The Russell went into a little bit of red money flow, but when it did, that was your buying opportunity pretty much, and you saw it come back down here during the 08 crisis. It almost got there, and it got a little bit of red money flow here back in 2012, but no significant, we're not talking like huge waves of red money flow, just a very small amount. So let's just keep a close eye on it, and if it keeps going towards the downside and it starts to break major support, then that's going to be a big warning sign for everyone to probably get out of small caps, right? We'll take a look here at the dollar real quick. Let me just pull up the dollar chart, the Dixie. So the Dixie's been in a strong uptrend, no signs of a bottom, and you actually have increasing green money flow. So I don't see the dollar topping out just yet. I think we have a little bit more upside in the dollar before we see a significant correction. Right now on the daily time frame, we have a -4 and an 11, so still bullish. Looking at the weekly though, there is a little bit of a slowdown in momentum. It's actually pretty much neutral at the moment. On the Dixie, you have a 6 and a 6, so just bears and bulls are even at there. It looks like price on the Dixie may remain flat this week, but we'll have to see, follow up with that. You are very, very close into cutting into red money flow here, but the Dixie has just had such a tremendous rally from the lows here. You know, it's gone from 99 all the way back to 105.5. And again, I still have some targets at 106.5. I think that's when you may start to get a bit of a pullback at top in the dollar, and that may form a bottom in equities, right? So that's probably when I'll be looking to long some stocks. I'm not going to be long just yet. And looking at the monthly time frame, so this is the one that's the most interesting. So on the monthly time frame, it's showing a green dot here, green dot confirmation, a very small momentum wave, right? And it's already curling back up, and you have a confirmation with this monthly time frame in 5 days. This will confirm if we're going to head back up towards the new highs in the dollar, which would be extremely bearish for the market, right? So we'll have to see how that plays out. But right now we have a -5 and a 15 on the dual band strength index on the monthly time frame for the dollar. And we can take a look at yields very quickly. So if we look at the 2-year yield, which is the most important yield in my opinion, on the 2-year, the monthly time frame is still looking very bullish, -3 and a 12, right? You still have a good amount of green money flow here. It's starting to decrease just a little bit, but we'll have to see and follow up with that. If we look at smaller time frames like the weekly, so the weekly, you know, you had your wave 5 top already in, right? And everyone thought the top was in for yields. Yields are not going higher. But again, you know, you never know. And the Fed is saying higher rates for longer. So now the yields are going higher, but everyone's trying to, you know, top. You know how everyone was trying to short the market, time the top on the market? Well, now they're trying to time the top in yields. And right now, yields just keep going higher, right? Just a little bit higher, and they pull back, and they go a little bit higher, and they pull back. And now they're going a little bit higher, and they're pulling back. And what is it going to take for everyone to start giving into when everyone starts to give into the fact that yields are going higher? I think that'll be the top for the yields, and then yields are going to start to go down. But, you know, just looking at the weekly, it doesn't look like we're going to top anytime soon. We just printed a very bullish candle on the weekly time frame of -5 and a 16. So it looks like yields may go higher this week, which would be very bearish for the markets, right? On the daily time frame, though, we actually have a potential top being put in here with a red dot. So if the yields start to pull back significantly, you may see a very big rally in the equities. But maybe you know, you'll get a big crash in the market, and that's why yields are pulling back so much, right? There would have to be a reason for yields to drop an entire, you know, 100 basis points in the matter of a week, right? Something pretty devastating must have happened in the market. You'd have to get a 10 to 15% sell-off. So sometimes these big pullbacks in yields are not that bullish of an event, right? Because you'll see if you take a look at the TLT, right, when the market was crashing in 2020, what happened to yields, right? You'd expect that, you know, yields pulling back would be very bullish for the market. But if you look at the TLT, right, yields were pulling back significantly, but it was not bullish for the market. And you saw that yields, you know, were pulling back, but the TLT was spiking because everyone jumped in to bonds. And then once, you know, the market kind of bottomed, you saw yields, saw the TLT pull back, and then yields start to spike again. So you got a lot of whipsaw. But again, this was not a bullish event. It was a very bearish event, and this was actually a market crash. So I mean, I hope we don't do that, because a lot of people are going to lose a lot of money, if, you know, considering they're probably not positioned correctly. All right, and I think I will cover maybe just a few stocks here. So Nvidia, if you take a look at Nvidia here. All right, I'm running out of breath. If we take a look at Nvidia, you guys can probably tell when we got that earnings report and we gapped higher, and it was essentially non-stop selling, right? Non-stop selling until the close. That was probably, you know, your top of the market here. We'll take a look. This was August 24. And we'll take a look at when the market kind of topped out. August 24. Okay, no, well, it's kind of like we got a big bounce that day, but that kind of marked the top of the market as well. This maybe was your confirmation that this was the high. But overall, you know, Nvidia getting this big high here, I think that was it for Nvidia, and I think now you're going to start to trend towards the downside. You are starting to get a little bit oversold on the short-term indicator, on the short-term time frames. So you may get a little bit of a relief rally coming back up to 450. But eventually you are going to come back and fill these gaps at 300 and possibly even go even lower. If you do like a 618 retracement here, you are going, sorry, 618 retracement. If you do a fib retracement from the lows to the highs, you know, you got ways to go to get to the 618. That is actually sitting at 250. And I know if you're watching this video and you're very bullish on the markets, it may seem extremely unrealistic that Nvidia would come back down to these levels, right? And all these stocks like Apple, Microsoft, and Meta, and Google, Amazon would come back down so much. But you know, it seems really extremely unlikely that Nvidia would rally to 500 when it was sitting at $100. Correct? So the same goes for the downside. It always seems extremely unlikely until it happens, and then suddenly, you know, in hindsight, oh, it was so obvious that was the top. But now people that are buying at these levels here, they're, you know, it's telling them these things. They probably don't want to hear that. So anyways, that's just my 2 cents on that whole situation with the, you know, AI and these stocks going up like crazy levels. You see like the C3 AI, you know, it's AI, it's the future, it's the future, it's the future. I'm so smart, I'm buying AI stocks now. And, you know, it's only $42. It's got so much, you know, room left to go up. And it's just broken its 200-day moving average, right? So now you got a lot of downside to go in C3 AI. You know, you've rallied tremendously from its highs, and now it's coming all the way back down. It's down already from its peak here. It's it's down 50, 40, 49%, basically 50%, right? And you have a lot of stocks like this that have done that. You have Palantir that's gone up, you know, tremendously, 182%, and now it's starting to come in, and you know, it's down 30%. But if it takes out this low here, you could very well form a head and shoulders pattern, right? And then you could start to go from there, and then you might come back down and retest some support here at $10. So again, just be careful longing these names. If anything, you would be wanting to long names like that are defensive names and that are beaten up beyond, you know, belief. If you take a look at Walgreens Boot Alliance right here, they have a, you know, it's pharmaceuticals, right? And then you're into 9% dividend yield. It's extremely oversold. If you look on the larger time frames, like the monthly time frame, you're coming back to some extremely, you know, major support. You could even do a 618 retracement of the highs. You're essentially at the 100% retracement. I don't know if you'll go low. If you go to the 1.618, then that's your that's bankruptcy, right? Because you're at negative $24. But I don't know. You could take a chance on it, right? If you're looking for a good dividend yield, and you know, 9%, you know, it's very attractive at these levels, right? Essentially, it's come back down so much. It was trading at its high at 96 before. Now it's trading at 21, right? So everyone loves it at the highs, but everyone hates it at the lows. So you want to love it at the lows and hate it at the highs. You want to sell your stock when it's at the highs. And then you can take a look at Triple M again, coming into some massive support as well. Looking at the monthly time frame, these two pivot highs providing some massive support, and you're getting whoever, you know, bought on the bounce. You made a little bit of change, but you should have taken your profits. Now it's starting to come back in again. Now it would start to accumulate again as well. Right? I would be looking for some longs here. You can see the RSI starting to build up, looking very bullish in my opinion. Looks like a bottom is forming in Triple M. So these are the defensive names that you want to be looking at and potentially accumulating. Obviously, nothing in this video is financial advice, but you know, do what you want with your money, and if you end up following me, then and it works out, then great. And if it doesn't, then you know, it's your choice. It's your money. You can do whatever you want, right? And then looking at Apple, right? We'll take a look at probably some big names here. Apple is looking quite weak at the moment, in my opinion. I'm seeing a lot of people, again, you know, the bulls, right? The people who want it to go up forever for no reason. They don't want pullbacks ever. But now this is the time that you want to look at Apple for a potential buying opportunity that's going to be lower. And I've told this to people, you know, it's 190, 195 looks like a great time to take profits. You know, breaking the highs, anything above the highs looks like a great time to start shaving some profits off. And again, nobody really wants to do that. And after a 12% correction, 10% correction after earnings, right? That was your huge dip after, and then yes, that was essentially your A wave, and then you came back up in a B wave rally, and everyone was talking about again, fill the gap, it's going to fill the gap, and it didn't, and it came back down, and now you're consolidating before your next leg down, and I think it's going to be coming very soon. You're going to take out the 200. That's when people are going to start to panic, and they're going to start to sell, and that's when you want to start to buy from them. Right around the 157 area, 1 to 160 area is where you probably want to be accumulating Apple, right? That's going to be a great. I'm going to be looking for some buying opportunities on Apple. You're going to get a very big bounce in the market, and then that's probably when you're going to come back up and retest 175, maybe even retest the highs at 180, and then you'll start to come back down in a bigger leg down as they raise rates more and more and more. But the overall, the trend is supposed to be lower in the markets now. But we'll take it day by day, trade by trade, and I'll keep giving you guys updates. Anyways, I think I'll wrap it up here. I don't really have anything else. If you guys want me to take a look at your stock and do some analysis for you, feel free to drop a link, drop your whatever you want in the comments, and I'll take a look at it for you in the next video. All right, hopefully you guys have a good trading week, and we kill it on the markets. Peace.